Let's put the spotlight on the power sector. Ever since BJP and NDA-led states have actually refused to participate in the financial restructuring of several state electricity boards and discoms, there has been a sense of nervousness in the market, mainly because of bad financial state of financials for discoms. How will it impact the entire power sector, including generation companies? Rupesh Sankhe, he is the senior analyst at Karvy Institutional, joins us on the show to discuss all of that. Rupesh, thanks a lot for joining us on the show. There was a lot of hope in the sector that as these discoms and SEBs will start restructuring, there will be a probable turnaround in the sector, apart from fuel, which remains a big worry even now. But now that BJP and NDA-led states are saying refusing to participate in it, it is definitely negative for the sector.
Yeah, if you look at the restructuring package and the condition in that plan, they clearly mentioned that the SEBs has to bring down their T&D losses, and SEB has to regularly increase tariff. Their cost of revenue and the cost of supply is very high, close to 1.5 rupees per unit. So that is the main condition in the entire restructuring package, and that condition is not acceptable to few state governments. And if you look at the incentive is just like 25% kind of principal repayment, or maybe grants based on the T&D losses. So those conditions are not acceptable to few state government or SEBs who are financially slightly better than what UP or MP SEBs. So I believe that Punjab and some SEBs or state government is not willing to go ahead with this restructuring plan. But surely UP is close to 50% of the total SEB's liability to lender sides. They will take actively participate in this restructuring program. But overall, we believe that restructuring plan is not the option that sector will see some sort of improving financial position of SEBs. But there are other issues like fuel availability, or maybe PPA renegotiation that has to take some closer view from the ministerial level.
Okay, so what's the call right now within the power sector? Where is the focus? Where are you most bullish?
See, actually recently we had interaction with the entire value chain from generation to distribution at the policy levels. We met a few consultants and the regulator also. What we observed that there is a sense of urgency to address the key issues in the sector, that is fuel availability and the SEB financials. So those issues will take time to resolve. Maybe the coal pooling mechanism or the restructuring plan, that will take time. So we believe that if you look at the demand supply dynamics in the coal sector, we are still facing huge coal problems, and these problems will remain there for next 4 to 5 years. So all those private players who are coal-based linkages or imported coal, where they have signed PP at a fixed rate, those players will still face problem in next 3 to 4 years. So what we are seeing that regulated players having assured fuel linkages from the Coal India, and their core ROE maybe it's down from what we have seen in FY11, that is down close to from 300-400 basis point because of lower plant availability factor and the lower incentive. But we believe at the current valuation, those players are attractively placed as compared to the private players who are banking on the imported coal, or maybe because they are facing a coal issues problem.
So you are actually referring to stocks like NTPC?
Yeah, definitely. If you look at the valuation of NTPC is trading at 1.4 times price to book value based on FY14 estimates. And at the current valuation, all the negatives are priced in, like the capacity addition, 14 gigawatt is on track. Their core ROE, which was 24% in FY11, that has come down to 20%. But at the 21% core ROE, with the cost of capital at close to 12%, the price to book value 1.4 is, we believe, is significantly attractive. And if you look at their earning profile from FY08 to FY11, their capacity addition was just 3%, and their core and their earning growth was 7%. And in the next 3 years, we are expecting close to 7% kind of capacity addition growth, 12 to 13% kind of earning growth.
Right.
So going ahead, there is no improvement in their fundamental. But valuation is a 30% discounts to their historical valuation, even after adjusting for lower ROEs.
Rupesh,
so we are positive on NTPC and the Power Grid Corporation.
Rupesh, how about stocks like Adani Power or even Tata Power? They have merely become trading stocks now, and but the recent news is indicating that Indonesia may be curbing exports of low-grade coal. Does that have any consequence on these stocks?
Say that export coal is banned for the those who are buying in the spot market, but those having owned their captive mines, like Adani Power has their own captive mines, Tata Power has their own captive mines, those contracts will not get affected, even if it is a lower calorific value, maybe below 5,000 kilocalorific value. So a real issue with the Adani Power and Tata Power is related to their fixed PPA they have signed with the UMPP related, and maybe Haryana and Gujarat Urja. So what we believe that the hearing is on, and very soon you will see some sort of positive outcome for these players. But again, they will file if the petition comes in favor of Adani Power and Tata Power, the respondent has a chance to go to the appellate tribunal or maybe the Supreme Court. So that litigation will go on for next 2 to 3 years. So we are not expecting that kind of a positive outcome. But if you look at the Electricity Act 2003 and Section 79 and maybe PPA article, or maybe competitive bidding guidelines that was issued by the Minister of Power in 2005, clearly it gives that the petition has a possibility of getting tariff relief interim. But there is again the litigation will go to the appellate tribunal and the Supreme Court. So those issues are there with Adani Power and Tata Power. So because of these uncertainties, we are negative on these stocks.